venture capitalists. Venture capitalists are private investors that offer financing for startups or other small business. Typically, these lenders are partner in limited partner and invest in our venture capital fund. A commission will then manage and make investment decision for the funds. If the group decide to back a startup, they will give them money in exchange for stake in the company equity. This committee member usually look for startup that ready to launch their product and have moved past the idea phase. This means if you have pitched to them, you will want to understand the background, know your number, focus your product benefit, promote your team member, analyze your competitor. Sixth, host a crowdfunding campaign. Whether you working a capital need to improve or you need to increase your cash flow, hosting a crowdfunding campaign can help. This initiative raises a small amount of money from a large number of people. In most cases, they are held online on popular platforms like Kickstarter or GoFundMe. Some tips for setting up a crowdfunding campaign include knowing your audience. You will want to target a specific group of people interested in your startup product before you begin spreading the word about your campaign. This can help you focus your effort and use resources more efficiently. Promoting your campaign. One of the best tools for spreading the word is social media. You can also host an event to help publicize your cause and engage your audience. Picking the right platform. You will want to research online sites that fit your industry and niche. This can help you find the right investor. Creating marketing material. This includes using both digital and print to advance your initiative. 7. Join a startup incubator. Sometimes the best strategy for creating a business model for your startup is to work collaboratively. Startup incubator offer facilitate and support to early stage companies. While there you will get access to expertise, mentorship and the tool you need to success like equipment, utilities, legal and accounting help. As you research and narrow down potential startup incubator, it is a good idea to interview other startup founders. They can give you a better feel for you will be a good fit or not. 8. Seek out government grant and subsidies. For many for your business sound like a dream, right? With government business loan or grants, it doesn't have to be. Many grants are only open to a specific industry or demographic through. This means some may only for startup in science, technology or health field. Other may be program for women owned startup. Some grant also act as minority incentive for starting a business on focus on enterprises zone, which are areas where the government encouraging development. Often the government wants to offer initiative for new business to increase economic growth. Applying for micro lending. If you don't equal Ninth, applying for micro lending. If you don't qualify for a startup loan or a new business, you can consider micro lending. These are a small loan that come from individual rather than financial institution like traditional loan. You will have to pay interest, but this interest can be you start up the cash it needs to grow. 10. Collect pledge from peer-to-peer lending. Still not sure how to finance a startup company? Another option for borrowing without using a bank or credit union is through peer-to-peer lending. This involves accepting a loan from business or investor. To start up, you will need to find to peer-to-peer platform like Funding Circle, Lending Club, Street Share. This platform can match investors with borrowers. Investor can then pick and choose which loan they want to fund. Some of the benefits of peer-to-peer lending include lower interest rate unless you have below average credit, fixed monthly payment, flexible use of the funding,